Hello and welcome to the Friday wrap up here on Landy's Crypto Corner. Today is December 13th, 2024. And while it's Friday for me, Bitcoin has entered the Saturday candle. And we're going to talk a little bit about the weekly to start with here. Now, there is an area of interest directly overhead that I would like to see the bulls close above for continued aggressive expansion to the upside here on the weekly, and that is the upper second standard deviation of the Bollinger Band. So let's go ahead and point that out. That is at 103,671. This just so happens to be the bear market fib pull, I believe. Let me go ahead and pull the local fib here. Yep. That is the 1272 of the bear market fib extension. So from $69,000 to that 15.5 low. The extension of that past $69,000 or the one spot here, we have seen where the upper first now is moved into position right around the 1.168, not 618, but 168 at 88,700. And then we have the upper second standard deviation essentially right on the 1272 now that Bitcoin has moved up intra-week in this candle. So for continued aggressive expansion to the upside, I want to see a close above here at that 103, 150 to 103, 650 to 103, 700 or so, depending on your chart. That would put Bitcoin above the 1272 and also above the upper second standard deviation here, thus preserving the more aggressive expansion posture here on the weekly. So I did kind of want to point that out. It's nice to see, as I mentioned earlier this week, that the basis band of the Bollinger Bands here on the weekly is not only above the prior all-time high, but also above the actual closing highs of the consolidation structure before the breakout to the upside here. So essentially this compression to re-expansion after the big expansion up into that 73.835 high over there. So it's kind of, excuse me, excuse my voice. I'm starting to catch the cold that my son has. So, but you know, we don't have any real big in-trend bearish divergences. There will be, you know, some what some might call phantom drives, but hidden bullish divergences likely from the structure over here. But in terms of in trend, and what I mean by in trend bearish divergence is now we have, you know, higher highs, higher lows, higher highs. Once we get the next higher low, or wherever this high comes in, you know, what we're looking for is upon any subsequent highs after that, we're looking for in trend bearish divergence to be building, and there is no in-trend bearish divergence to be had here. You know, next higher low that comes in on the weekly, wherever this high comes in, then we can start gauging where that, you know, might occur. Now, in this case, you know, we can actually gauge where some of the upper bounds of RSI here are on the weekly. If we look to the 80 read up here, we can see that that is the bull critical zone, bear critical zone. That is at 107,867. Now that will update on Sunday, provided, you know, even if it does get hit, it will update. That will likely end up around, you know, anywhere between 108 and 110. Maybe even higher if Bitcoin lives below that that region for a little bit longer here at around this RSI level of 77 to 78 or so, and track sideways. So that is something that I will watch for and update you on Wednesday. Man, I'm all messed up. I'm so sorry. Now, we also want to see closes above $100,000 essentially. So 99,800 is the actual pivot number for momentum. Looks really good. You can ignore the two lines here. That's for the daily. That's the trend line regression from the daily that I've been showing. But, you know, closing anywhere above 99,800 to $100,000 is going to be good for momentum on the weekly. It can stay up in the overbought zone for quite a long time. Now, again, this is a regular Stoch. This is reading close over close price momentum, not the momentum of RSI or the velocity of RSI, which is what a Stochastic RSI does. So this is close over close price momentum. This is running crypto optimized settings. This has been back tested by myself and many others for a very long time in crypto. It also works really well in traditional markets as well. And that is running a 6-3-14 255 look back for the TA nerds out there. If you don't understand what that means, don't worry about it. Now let's go ahead and go back down to the daily and take a look at this compression. Like this compression, to expansion, where we're starting to see the etchings of expansion to the upside here. We have lower low swing structure. Technically, this was not a low. This is both a high and a low swing. But the last higher low is where we need to see Bitcoin maintaining its closes above. And that's coming in at roughly 94, 200 to 300. Now, Bitcoin has made another new all-time high on a closing basis. Again, that's on a closing basis at 101,428 now. And essentially what I want to see from here to actually kick off true expansion or hit the next big expansion phase, either to the upside or the downside, would be closes above the upper second. That has now moved up very close to that 103,645. That's also, again, that just as a reminder, that is where the upper second is on the weekly as well. Same area on the daily. So expect lower term time frame resistance when and if price gets there. I mean, price will eventually get there no matter what, in my opinion, no matter what happens. But just look for that area to be an area of interest for lower term time frame resistance if it was going to happen sooner rather than later. That also, doesn't always remain true, but just keep it in mind when you're looking at your charts and if price is approaching that area. And that's around $103,000 to $103,000 even to $103,700 or so. And if Bitcoin does close above there, even if it makes a new all-time high above $104,000, I still need to see closes above there to kick off true expansion on the daily to the upside. Now we're seeing a positive sign in Bitcoin trading above the basis and upper first, indicating the etchings of expansion of price volatility within the bands. Now we want to see it close above the upper second and start trending outside of that area and the upper first, kind of using almost the upper first as support, kind of like what it just did in the past two daily candles, and start to really initiate aggressive expansion for the next leg up. Now, we also must be aware that if we're looking left, this high, we don't want to see a bearish reclaim of the close open over here. And this is at $99,000. This would be also setting a closing high in this area. All right. So it is a higher high. And the main reason I don't want to see a closing high come in there is because of where RSI is. It will definitely get another drive of bearish divergence if that were to happen locally here without getting a breakout. I think no matter what, we're going to see some more bearish divergence populating unless it just moons straight above all of these other RSI levels to almost an 85 read up there, which would be kind of crazy, not out of the question, but kind of crazy. And that's at almost 121,500. So, I've got I'm going to hold my breath on that one. I think that even if Bitcoin does leg up and begin expansion, when looking at the totality of the longer term time frame Fibonacci levels of resistance, we've got the 1414 up there. And I do think on any kind of an expansion on the daily, we're going to see, again, a much higher volatility environment, eventually targeting this 1414 around 128 to 130, because we do often get swings or wicks through those areas. And that's where, I would be just cautious. We'll likely see, pullbacks, consolidations before then. If it just moons right to it, great. I just don't know about the viability of that from this particular setup right now. This could also just hang around the highs and get reclaimed and come back down, right? Now, the lower second standard deviation is right around this low at $92,000 still. And actually, I I should just turn on all of the local stuff here. So let's go ahead and do that. So I've shown this before. I showed this on Wednesday, I believe. So any kind of closes below the last low here not only would set this high on bearish divergence here, losing this low at around the 94,200, and realistically you'll get the etchings of that, starting to be a likely occurrence on any closes below 96.6 at the closing low here of this higher low structure. If it does drop the actual lows here at 94,220 or 94,200, then I would look for it to run down to $92,000, somewhere around the lower second standard deviation. Any closes below there would put it right around this closing low, which is also where we saw the little consolidation highs here come in, and we saw a swing high confirmed before a nice higher low and leg up to new highs again. That would be the next big zone on any closes below the lower second that loses $92,000. That's what I would start looking at, is somewhere in this zone around the 92 to 88,700. And, there is areas of interest right here at this swing low at 90,682. But realistically, anywhere below there, I am looking to around the upper $88,000 to $89,000 region here. If that is lost, yes, Bitcoin can hang on to the candle structures over here at 87,340 down to $85,000, but that's dangerous territory for the bulls. Might present some opportunities if the setup is right, if it did get there. But on any closes below $85,000, we're looking for at minimum a wake down, possibly even daily closes down for further retracement or further correction. So far, we've gotten a pretty mild correction around the highs here. Yes, we had the big $12,000 candle that put in the high and the most recent, major low structure outside of this most recent higher low. But we still need to be very cognizant that we haven't seen a major correction. And I'm talking 20% or more. It's been picked up and it's been consolidating sideways and up. It's still an uptrend right now. And we're looking at the etchings of expansion. So if you were to ask me what's the more likely outcome from here, I'm going to say we start closing above 103 to 104, $104,000. We're going to hit re-expansion to the upside. Just we're looking for closes above $104,000. And then, there is some areas of interest directly overhead from the structure that Bitcoin just exited more recently, back here on this higher low structure at the 66,700 to 800 or 66,800. With that 67,800 close over here. And that was, early November, just, right around the election. It put in that low on election day near the end of the day. Once it was kind of revealed that Trump was going to be, well, it actually front running the Trump win during the election. And then the next day, once everything was finalized, we saw the big breakout to new all-time highs and higher, and the big expansion here. Now, from this structure over here, we can pull a fib from high to low, 73,835 to $49,000 here. We'll try to get that as close as we can. And I did not get it even close here on the top side. Sorry. There we go. And we can see that, there is some more local fib structure to be aware of. On any closes above the upper second, any kind of closes above that 104, we do have the 1888 at just above $106,000. Next big area to pay attention to above there. And I would say in the intermediate timeframes below the daily, I would be looking for, like 106 to 108, 108 to 110, 110 to 112 around this 2 spot. And then, big legs up, possibly some areas of interest along the way around 115 to 120. Then we're starting to look to 125 to that 130, which is right around that 1414 at $128,000 on that bear market fib extension. So, we do have confluence kind of for the next big expansion phase. I don't think it would go straight up, but we've seen things get crazy. So, nothing's out of the question, that's for sure. And to the downside, even a local fib structure, you can see that the 1414 is at 87.5 right around this close open. And we would not want to see that area lost realistically. Then we're testing just this bear candle low at $85,000, and the bulls are hoping that that holds up at that point. Otherwise, any closes below are going to beget price action down to the 1272, the 1.168 rather, between around 82.5 to around $80,000. Anywhere below there, well, we're in 24% correction territory and possibly more to retest the breakout. Not my most favorable outlook on where price would head, but Bitcoin has hit its trendline regression, the second one, and we are seeing price being held up here. It's not anything too crazy, especially when you look at fundamentals. So let's go ahead and take a look at some fundamentals. This is the exchange reserves chart. I know there's so many other metrics that I could show you, but I don't want to baffle you with bullshit. Just understand that this line going straight down is the Bitcoin on exchanges. This is their exchange reserve. So it is rapidly decreasing now to, let's see, what is the most recent one? What is that level? It says 2.4 mil, but I want to see if I can get the exact readout. Yeah, 2.426 million. So it's just continuing to trend down as Bitcoin rises, and it's gone even steeper to the downside here than it was after the breakout. So, and something that you got to understand about this, exchange reserves are dropping like mad. For the longest time, exchange reserves were increasing, right? So people were putting their Bitcoin on exchanges to trade it, sell it, and there was buying pressure on the other side, pushing price up. The first major change that we have saw in Bitcoin's history in terms of trend for exchange reserves occurred right around the nasty flu, we'll call it, from 2020. We saw its first ever real major downtrend for exchange reserves, a little bit of an uptrend, and then started to go back into a downtrend, deviate, lower highs, and then went sideways for a while, and then absolutely dropped off the map. Guess when? When ETFs got involved, in terms of spot ETFs in this case. So, understand that this is, all kinds of people buying. It's not just the ETFs, although they play a major, major role, because ETFs are being bought by regular people. Go and buy the ETFs, which is essentially a cash wrapper for Bitcoin that's being held in custody. We can see that Bitcoin is in custody, and we can audit the shares that are being issued in those ETFs. Now, I can get into that at some point, but we have insight. We know how much reserves they're holding for Bitcoin, and we know that it has to be essentially one-to-one. There is some ARB that goes on with the creation and redemption units for ETF shares, but in this case, people are rushing to the ETFs in a big way, and that's causing Bitcoin to come off exchanges. It's also causing Ethereum to come off exchanges, and will likely do the same for alts when they are approved, either as basket assets or individual assets. So, in general, although a lot of people hate this thesis, Bitcoin, it's money and big corporations are involved. These are people in general that own these shares. Now, yes, there's large conglomerates and funds and stuff like that buy these shares, but also a lot of individuals and a lot of financial managers putting Bitcoin on the balance sheet for their customers as well. So, this is assets under management after all. And I want to caution my Bitcoin maxi friends who really hate this ethos, that this is one of the outcomes that was almost inevitable no matter what. And we have the ability to look on chain and see what their reserves are and what's being held in custody. And we have the ability to audit how many shares are issued. This gives us the only insight that we have really ever gotten into these kind of assets at large on a public scale, outside of what is either being self-reported or third-party audited. And most of those third-party auditors are in some way owned by the companies that they're auditing. So just understand that. Don't be too freaked out by it. And if nothing else, hold on to your bag, hold on to your private keys, hardware wallets, preferred, and make sure you got your seed phrases stamped in metal and all that good stuff. And just make sure you're taking care of your coins, because again, not your keys, not your coin. And if you have anything like hot wallets or hardware wallets where you've taken seed phrases and you've taken pictures or you've emailed it to yourself, I usually caution against any of that kind of stuff. I've heard of crazy, tricky ways that people have told me that they're doing it and it's secure, but stamp that shit in metal, put it in a fireproof safe at that. You can even split up those metal sheets and you can store it in different locations, all that kind of stuff. So, yeah, I think that's it. Sorry about the little tangent there at the end. But I want to wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe and have a great weekend. I'll be coming back at you here on Monday. You'll probably see me in spaces throughout the night tonight and throughout the weekend. So if you have any questions, feel free to hit me up. And yeah, take care of yourselves. Landy out.